Right, I believe we are recording. Just want to confirm that. Yep, we are recording. Everyone, thank you so much for joining us this morning. Again, my name is Ed Recker. I'm with Sallie Mae, but this morning we're representing OASFA, and we are here for the Financial Aid 201 webinar. So just a couple of quick housekeeping comments before we begin. So when you entered the webinar, you were placed on mute. However, we do want to hear from you. So at the bottom of your screen, you should see a Q&A button. Simply click on that button and then type in your question. At that point, we do have folks behind the scenes, specifically Emily Goldman and Veronica Davidson, to answer your questions. And thankfully, you will not be hearing from me alone this morning. My colleague, Melanie O'Hallock, will be joining me. We're going to do a little bit of tag team action here to make sure that one, we keep our voices fresh, but also two, you don't zone out when listening to really either one of us, but specifically me. So again, thank you for joining us this morning, and let's begin. We're going to kick off. All right, so first and foremost, we do want to tell you a little bit about OASFA if you're not familiar with us. So OASFA is a nonprofit organization, and it's comprised of financial aid professionals. This is a volunteer organization, and the outreach committee is an all-volunteer committee. Our primary charge and goal is to serve as the primary resource for you all and others across the state for current financial aid information. So we will do this through a variety of activities, which includes webinars like this, training programs for various stakeholders, such as OASFA, such as admissions staff, high school counselors, access advisors, and TRIO. So this is a free service to you all. You do have permission to copy and distribute these materials for your students and families, but you cannot charge for it. And in order to get specific permission, we do just ask that you email us at outreach@oasfa.org. Just give us a brief description of what you'll be doing, and then at that point, we will most likely grant permission. I don't know that we've ever not granted permission. So, all right, without further ado, we're going to go through some FAFSA completion numbers. So as you can see, the title here is Apples versus Oranges. And the reason that is for a couple of different reasons. We've had some, as you know, these past couple of years have been a little bit crazy. And based on when the FAFSA opens, whether we're looking at submissions or completions, those types of things. So keeping that in mind, we do want to show you what it looked like last year and where we're at currently this year. So as of last year, approximately this time, we were only at, not at this time, as close as we can get to apples. We were at about 500,000 last year. We're at about 1.1 million this year, and we're up about 227 additional first-time filers. Now, keep in mind that these are submissions only. So again, we're trying our best to do some apples to apples here, but we realize that it's kind of messy just based on where the U.S. Department of Education was last year and where we are this year. So it makes it challenging to do a true year-over-year comparison. But with that said, we're doing our best. And also to highlight, total FAFSA submitted is over 5.4 million FAFSAs as of January 24th. So again, just kind of highlighting some of the things that I just voiced over. The forms opened on different dates. So December 30th last year versus October 1st. And keeping in mind that does include the beta. That's when the beta did open. So that is later in the notes, but that's why it's October 1st. We openly realize and acknowledge that It wasn't open to everyone until mid to late November, but technically it was open for some on October 1st. Last year, data was submissions only until early April. So the Department of Ed was only showing us how many students had submitted a FAFSA versus how many actually completed it. I'd mentioned the beta part of it. So this data does include those that completed during the beta testing because they completed a real FAFSA at that point. And colleges did receive ICERs since the beta began. So there were schools receiving ICERs in October, although that number was very low at that point. And to compare that, 0 ICERs were sent to college last January, and over 17 million have been sent as of early January this year. So progress from that perspective. We're getting more back to what we've become accustomed to. So when we look at the national tracker data, so as of February 7th, 32.3% of the class of 25 have submitted a FAFSA, and 31% have completed a FAFSA. So the class is overall, the class is 5% ahead in FAFSA submissions compared to the class of 24. So that's definitely a positive. And the NCAN, so National College Attainment Network tracker has to compare submissions only until late March. So again, that has to do with what the Department of Ed was releasing and disseminating at that point. And the FAFSA tracker is comparing week to week, not date to date, because really of what we had mentioned earlier, that apples to oranges kind of thing. So this is what it looks like when you actually go to the NCAN website. But this is a couple of screen grabs when we look at it. So really just illustrating what we've already stated about completions and submissions and so forth. So again, compared to last year when we talk about submissions, we are up. And similarly, when we look at it compared to class of 23 submissions. So again, good data there nationally. But when we look at Ohio numbers, it tells a little bit of a different story. So for Ohio, 32% of the class has 25 has completed a FAFSA. This class is 0.3% behind the FAFSA submissions compared to last year. Ohio does rank 39th for this year in year-over-year comparison. And the Ohio Department of Higher Education has awarded 5 regional FAFSA 25 grants to help increase FAFSA completion. The FAFSA tracker and Ohio FAFSA data numbers may vary slightly due to the data regarding the number of seniors in Ohio. And, really at the end of the day, what this all boils down to is we still have a lot of work to do in terms of helping Ohio students complete that FAFSA and moving forward to post-secondary education. So again, just really illustrating what we had just said. So when we look at estimated FAFSA completion for 2025 seniors, Ohio is right there, ranking 18th. But when we look at the year-over-year change, you can see we're not in the top 15. Yeah, we're way down there at 39th, which isn't illustrated on the screen, but we just discussed. So. All right, so we're going to move on to federal verification, getting a little bit more into the weeds. So gang, a lot hasn't changed from this year to last year, which in this case, I think is a pretty good thing. The Department of Education stated last year that they would be significantly reducing verification requirements for 24-25. And of course, that would carry forward to this year, 25-26. And the big reason behind that is the implementation of the direct data exchange with the IRS. A lot of the verifications were triggered due to financial financial issues, people either incorrectly inputting information or it being ticked by the Department of Ed's algorithm. With that being said, because almost everything financially is now coming over directly from the IRS, it's verified. That has greatly reduced the number of students selected for verification. So again, this is a big deal because it reduces the burden for colleges and students, and it also helps to protect against fraud as well, which is a very, very good thing. So again, not a lot of changes here, but very, very good things. And just for a reminder, when we talk about verification, this is what verification is. It is a process where students must submit documents to confirm their FAFSA information. We do encourage that if a student is selected for verification, they should respond quickly to any requests from the college, and also keep in mind that if students are applying to multiple colleges, they will be verified by multiple colleges. So they have to submit that information to each individual college. Verifications I say they can travel, but oftentimes schools will want to do their own. And if the student is not selected by the federal processor, so if the Department of Education doesn't flag them immediately for verification, a school may choose to institutionally select the FAFSA for verification if they have reason to question something. So again, the majority of them are flagged by the federal processor, but the school does reserve the right to be able to flag them themselves. All right, we're going to move along to professional judgment and provisional independence status, because it really does in some ways align with verification. So we're going to start high level and really explain what professional judgment is. It refers to the authority of the school financial aid administrator to adjust data elements on the FAFSA which impact the student's cost of attendance, or COA, and or student aid index, SAI. And these are made on a case-by-case basis. Professional judgment made by a school's financial aid office, that is final, and it can't be appealed with the U.S. Department of Education. Every school is required to have a professional judgment process. So a school can't say, we don't do this. Every school must do this, and they have to have a process in place in which a student and a family can submit a professional judgment request. Now, this was new last year, but again, because there may be folks on the line that this is their first time through it, there are actually two different kind of paths to professional judgment. There are unusual circumstances and special circumstances. So unusual circumstances are a situation when a student is unable to contact a parent, or where contact with a parent would pose a risk to the student, which leads to a financial aid administrator changing a student's dependency status. And this is commonly known as a dependency override. So the student would essentially be going from a dependent student to an independent student because of the reasons that we just laid out. Parental information cannot be obtained. Special circumstances different. This is where a student or a contributor experiencing a financial situation that leads to a financial aid administrator adjusting data elements in the cost of attendance or the student aid index calculation. So two very different things. In the past, they were all kind of lumped together. They have been split out into these two separate categories. So when we look at this, again, kind of the differences. So when we think about unusual circumstances where a student is unable to provide parent information due to these unusual circumstances, here are some examples. So parental abandonment or estrangement, student or parental incarceration, death of a parent, legally granted refugee or asylum status, or human trafficking. Those would fall under unusual circumstances. Special circumstances, this is, again, where that student or contributor experienced significant changes to their financial situation. So that those examples would be loss or reduction in working income, unreimbursed medical or dental or funeral expenses, the divorce of a parent or independent student, death of a parent or independent student's spouse, and extraordinary care expenses. So those are the types of things that would fall under that special circumstances category. And also, what are not considered unusual circumstances? So we're going to start with unusual. And gang, trust me, I worked in financial aid in a financial aid office for 15 plus years. I know Emily and Veronica have heard these. Every financial aid administrator has heard these at one point in time. Parents refuse to contribute to students' educational expenses. That is not a reason for an unusual circumstance. Parents are not willing to provide information for the FAFSA form. Parents don't claim the student as a dependent for income tax purposes, or student demonstrates total self-sufficiency. Unfortunately, none of these qualify for unusual circumstances in the eyes of the U.S. Department of Education. Ergo, the financial aid administrator cannot take them into consideration for an unusual circumstance. Now, if a parent refuses to provide their information for the FAFSA, if they're unwilling to do so, but the student doesn't fall under either of those previous categories, the student can choose to have their school determine their eligibility for a direct unsubsidized loan only. So essentially, it still allows the student a path forward. However, it is just for a federal direct unsubsidized loan. This path still has to be confirmed by the college through a written statement by the parent or parents, and then or documented by a third party. So again, not ideal, but it is a path forward for students who fall under some of those previous categories that aren't eligible for a dependency override or an unusual circumstances to still receive some federal aid to help them with their education expenses. As we continue down this path of dependency status and dependent versus independent, so a student's dependency status determines whose information will be reported to the FAFSA. So dependent students are required to report both student and parent information, while independent students are required to report only their own information and their spouse's information if they're married and not separated. And then some students will qualify as independent on their FAFSA form and not be required to provide parental information if they hit any of the following. So they were an orphan at the age of 13 or older. They were a ward of the court, are or were in foster care, were an emancipated minor, or are in a legal guardianship as determined by the court in the student's state of legal residence, or are an unaccompanied homeless youth or unaccompanied at risk of homelessness and self-supporting. So keep those in mind as well. Those are things that will automatically qualify a student for as an independent student, ergo not needing parental information. So continuing down this path, if the student doesn't meet that independent student criteria automatically, they will be considered as a dependent student unless they indicate an unusual circumstance on the FAFSA form. And they can do so by selecting yes to this question. So this is a screenshot from the FAFSA, and that question reads with some detail below it. Do unusual circumstances prevent the student from contacting their parents, or would contacting their parents pose a risk to the student? If they click yes to that, that does trigger a provisional independent status. So this was, again, something new as of last year. Students who indicated that they have this, they are granted that provisional independent status. These students will be able to skip certain questions about their parents on the FAFSA and submit the FAFSA without parental signatures. Now, these students who are considered provisionally independent will have results from the FAFSA, which will automatically calculate a provisional student aid index number, or SAI. The SAI and the student's status as an independent student will be subject to review by the college that the student attends. So that is something that the college or university is required to follow up on. They will need to reach out to the student and really just get more information, more details about their situation. Hence the provisional. It's provisional pending further review. The college or university will follow up and get that review. So this is what it will look like for the student. So once, if they click that button, it'll say that they're a provisionally independent student. And again, the student will need to provide documentation of their unusual circumstance to the college that they plan to attend. Until the student's circumstances are verified, federal aid will only provide the student federal student aid will only provide the student an estimate of their federal student aid eligibility. So again, it's all provisional. It's all contingent on that unusual circumstances flag. Essentially, what this does is it just shows the students that there is a path forward and that they can potentially move forward, but they are going to have to provide additional documentation. So what happens after that? Again, students will have to provide that documentation to the school. Colleges should provide what supporting documentation is required and estimated timelines for their requests to be reviewed. So trying to give the student a timeline as to how quickly this will happen. And then once the college has received and reviewed the documentation, if approved, their final federal student aid eligibility can be determined. So again, this is all provisional. It is pending that review with documentation. But once that's done, the student will have some closure on it and be able to move forward. So I'm not going to read through these verbatim, but we did want to give you some examples of what some of the school follow-up emails are to students. So the first example is if the student decided to move forward with an unsubsidized loan only because they didn't meet an unusual circumstance. They didn't meet a independent, automatically independent, but the parents are unwilling to provide their information. So this is what a sample email would look like from a school, letting the student know what that looked like, with a specific shout out to that. The school has a parent refusal form that would need to be submitted to them. In terms of unusual or other circumstances, so that provisionally independent, we have that one down below. Again, it's just letting them know that, hey, we've received this. Thank you for that. You do need to submit that dependency override form along with required documentation in order to move it from provisional to actual. Now, we've talked a lot about unusual circumstances. We're going to pivot and go to special circumstances. So again, this one really focuses more around income or loss thereof or other expenses, higher expenses. So what would qualify as a special circumstance? Loss or reduction of working income. So I actually did a webinar last night, and this was a big question. My income now is lower than it was from the tax year that we're using. Perfect example. That is a textbook example of special circumstances. Loss of benefits such as child support, unemployment, alimony, social security or disability, or workers' comp. So those can be taken into consideration. A one-time lump sum income or pension from a 401k withdrawal. So again, it's a lump sum. They can take that into consideration. Unreimbursed family medical or dental expenses or funeral expenses. And gang, I always make sure to throw this out. Financial aid folks will take a look at these, but think big expenses. I'm not minimizing any expense, and big is kind of subjective, but if somebody had a root canal and it cost them $1,000 out of pocket, can the school process that? Yes, they can. Is it going to move the needle? It will, but it'll be microscopic. It probably won't make a difference. So think about thousands and thousands of dollars when we start talking about this. Extraordinary care expenses such as elder care and adult children not already included in the number in the household. So again, think about if there are people in the household with special needs, really extraordinary needs that require additional expense. That's something that can be taken into consideration. If the parents or the student are divorced, they get a divorce, and obviously that would impact their income. Or if there's a death of a parent or the independent student spouse, that would impact it as well. Those are all of these are situations in which a special circumstance could be processed. So some things that don't qualify as a special circumstance. So an inability to pay the estimated or outstanding balance from current income or with educational loans. The number of students in college in the household. So this was something that was taken out of the formula last year. That is not that the SAI formula that is no longer taken into consideration, and it is not eligible for a special circumstance. We at OASPA understand that a lot of folks are upset about that. Uh, this is my kind of public service announcement. Um, we hear you. We absolutely appreciate what you're saying. If you feel strongly about it, that's something that you can definitely write your congressperson about. Standard living expenses. So things listed there, uh, and or consumer debt. Those cannot be taken into consideration. Education debt, with the exception, things that may be considered. And again, I stress may because it's at the discretion of the college or university and really what they deem as appropriate. Uh, some may consider parental educational debt that's currently in repayment. It has to be documented and for the students who are no longer enrolled. So that's something that maybe it's really a solid maybe. Generally speaking, it depends on the school. Expenses that the family's been paying regularly for several years, such as healthcare insurance premiums and costs. Lifestyle expenses. So, for example, vacation or tithing expenses or family events, wedding or retirement. I used to work at a school that had an equestrian program, and boy, that was always a fun topic when people would talk about, well, they have to board their horse and the horse expenses and things like that. Unfortunately, that in this case falls under lifestyle expense. So we could not take that into consideration. And then one-time increases in family income. So lottery winnings, inheritance, those types of things will not be subject to a special circumstance. Some other things to consider when when thinking about special circumstances appeals. So I had alluded to this, but each college has its own process, procedure, and paperwork to complete. Their timelines can and often will be different. So keep that in mind. You can only apply for one tax year. So this isn't a blanket special circumstance that will apply to a student for their entire educational career. It's something that needs to be revisited each year. Documentation will likely be required as part of that appeals process, and I would actually state that it will be required. I'm not sure that there are any financial aid administrators that would do a special circumstance without documentation. Additional questions about what can be considered a special circumstance should be directed to the individual colleges, because, again, I alluded to this, but each college and university is going to do their own special circumstance. It can travel, but most schools, because they're all subject to review, will want to see the documentation and do it for their specific institution. And then typically appeals are done after students receive their financial aid offers. So again, this is something that generally speaking, we're in financial aid offer season right now. They're starting to come through. This is when students should be able to see those offers. And if there has been a change, now's the time. All right. And we do have some sample appeal forms here. So our friends at Central Ohio Technical College and Ohio State have supplied there's for sample purposes. Again, just showing you what they look like. Don't expect anybody to screen grab these or start writing down furiously. We just wanted to give you a feel as to what they look like. And then we also have a couple from our friends at Ohio University and the University of Dayton. So again, just to give you a feel as to what they look like, but also know that they are going to look different from school to school. So that's part of it as well. Generally speaking, the information is going to be, pretty close, pretty standard, but again, they're going to look different based on the university and based on how they approach it. All right. At that, you all have heard from me enough, at least for now. I'm going to turn it over to Melanie. Melanie, take it away.
Hey, thanks, Ed. I'm sure that you'll remember, but I'm not sure if folks joining us today who maybe joined us last year, if you guys will even remember or not. But last year, with all the craziness that Ed has just mentioned and talked about, and with things being so far behind, including schools' ability to get aid offers into students' hands, we confidently could not do this webinar until May 1st. So that really tells you how much better we are doing this year from that perspective, and what the government has done and how things are going much better. Ed, it's great that these students fortunately have not been experiencing the same delays with regards to aid offers. As you just said, they're already starting to come out. But as I said, it's true that things have improved, but they haven't quite returned to completely normal yet. As recently as just several years ago, it was the norm for students to be receiving aid offers from some schools as early as late fall, with many schools having their aid offers into the prospective student hands prior to the Thanksgiving holidays. So the kids had Thanksgiving to go home, look at them, talk with their parents. So again, while things are getting better, there's still going to be stress with this shortened period of time for your students and families to try to figure out. And so we just want to be sure that until things are back to completely normal, and even after that, that we all understand that it's important for us to help our families through this process. Last year, in response to the significant delays, I just want to briefly mention, since the aid offers went out late, many, if not most schools, pushed back their May 1st decision dates as far as admissions. And Ed, I don't know if you've heard anything new since we spoke the other day, but we have not heard anything to date about this happening with the class entering, for the fall of 2025. So keep that in mind. There may not be that extra period of time on that end as well. So again, it's really important for us to be sure we help families understand, help them identify the key elements or the items so they can compare aid offers from all the different schools and be able to figure out what the real cost is and what options they have to pay. So let's take a look at the financial aid offer. On this next slide, each college where, first of all, the student has been accepted for admissions, and secondly, the student includes the school in their list of colleges on the FAFSA, those schools will provide an overview of the aid that the student is eligible for with an aid offer. As we just talked about on the last slide, with a perfectly normal processing year, and I shouldn't say perfectly, we should say somewhat normal processing year, the aid offer could have been sent as early as late fall. Oftentimes, students were applying for admissions at the same time, so they'd apply for admissions and boom, they'd have their aid offer right away. This year, while in many cases there's that short delay compared to last year, but it really will depend upon how well and when your students are doing their admissions applications this year. We're going to have a lot of students doing both at the same time. So what's important to remember as far as financial aid is if the student has not yet applied for admission for all those schools they're thinking about going to or all the schools they're considering, they still should list that school on the FAFSA. Okay, so even if they haven't done the admissions yet, they want to get them on the FAFSA. Aid offers, what do they include? What do they look like? There's the official cost of attendance, or the COA, and the financial aid they can expect to receive. And we're going to take a closer look at both of these. There are many things involving aid offers that aren't any different for next year than for any other year that we've talked about them. They still cover only the one academic year at a time. How the student receives them can still be different based on the schools. So you really need to have your students watching closely and frequently the mail, their emails, and be sure that they're set up once they've been accepted for admission and they've gotten an email, but make sure that they're set up to be ready to easily access all the school's portals. That's real important as well. Okay, students need to be aware of the challenges they may face as they begin receiving the aid offers and are trying to compare them. We just mentioned there's no standard format or template. Not all the schools list all the different types of costs or the total costs. Earlier, Ed was trying to do an apples to apples comparison of 2 years that were so totally different when things happen differently. It's the same kind of comparison oftentimes when students are looking at those aid offers. So they need to keep in mind again, not all schools list all the different types of costs or total costs. Not all will break out the cost components. On top of that, financial aid can be a language all of its own. And while folks do, from the financial aid office, the schools do a great job of trying to be sure they've explained all the jargon and the terminology, it can still get confusing for folks, even if when it is fully explained. And then also as far as the types of aid, not all schools will break that out by type. Free money, grant versus loan versus work. So those are just some of the things that we want to be sure that we try to help the families and the students and kind of what they need to look for and why it's confusing to them. It's not surprising it's confusing. They just need to understand what those challenges are. Okay, we're going to start on the next slide with cost. And then after that, we'll take a look at aid. So what are the different types of costs and what makes up total cost? First, there's a direct cost. Those are the ones showing up on a bill or a statement, and the student will be required to make the payment for them directly to the school. It includes tuition and fees, and if the student lives on campus, it'll include housing and meals. Then we have those indirect costs, books, equipment, transportation. Every student will have some type of a transportation, whether it's, parking fees if they're commuting, if it's a parking pass to keep a car on campus, or, it's air flights if they're traveling far distances a couple of times a year. So there's always going to be a transportation cost. And then there are those miscellaneous costs. We like them to do their laundry. We do like them to spend some time getting some stress-free entertainment. It will help them do better. But entertainment and books, clothes, and laundry are some of those other indirect costs. And I think it's important for us to help the students understand that these indirect costs are the ones where the students and the parents have some measure of control. Those are the ones that we can focus on reducing or minimizing, which of course reduces their total costs. So again, keeping in mind, how can I reduce some costs? Take a close look at those indirect costs. Alrighty, now we'll look at the other big piece of the aid offer. In addition to the costs, the aid offer will of course include the aid the student is eligible to receive. So what does that aid look like, or what types of aid can be included? This slide shows us the two general or main categories, or how we break out the types of financial aid. There's the gift, and then there's the self-help. Again, one thing which can make understanding the aid offers or the aid being offered by the schools is the fact that the schools can present the information differently. For instance, like I said, not all schools will separate or categorize aid by type. It'll just list them all in one big list. So that's why this type of information that you can share with your students is going to help them parcel that out. Because it's really important to separate gift versus self-help, because gift, of course, is the free money. That's the one that doesn't have to be paid back. So we want to be sure that they know what part of the list is free money, the scholarships and grants. We would all agree that's the best kind there is. It's important for the student to understand, though, that free money, that it may be conditional based on need, them demonstrating need, or perhaps participating in a program or an extracurricular activity. So again, they need to be sure that they understand and what goes behind that. We've got some questions later on another slide that'll give you more help in helping your families dig down on that. The other major category of aid there on the right-hand side is self-help. And that, of course, includes loans and work. We'll be taking a closer look at these in just a few minutes. But you see here the types of loans. There's the loans borrowed by the student. Those are the student loans. That is the federal direct student loans, both subsidized and unsubsidized direct loans. Then we have credit-based loans, and those include a federal Parent Plus loan and then also private education loans. And self-help also includes work, both federal work study and campus-based work programs. Okay, here are the steps students should follow to compare their aid offers. And we do have a resource from OASFA that we'll show you a quick screenshot of at the end and is available on the website. But we do want to go through it so that it makes sense to you, so you can help your families, help your students, help it make sense to them. Now, I'm pretty sure that hopefully your attention may have gone to the big red stop sign. That's where we wanted it to go first. As we, on the last slide, we introduced gift or free money versus self-help, loans and work. Here, we're just reminding everyone of the importance for students to be sure they know how much gift aid eligibility is included in each aid offer. What aid is the free money and what aid being offered isn't free money. Sometimes it may look like this is all I need to do is accept this, and it's not really clear. So we need to make sure and help them understand. As we already said, part of what makes all of this confusing is that some schools will categorize, that's the second time I had trouble saying that, categorize the aid or group the types of aid together. Some will break it out while others just have it all lumped together. And this is also a reminder, we can't say it often enough, the students want to be sure they've applied for all the possible sources of this free money and that they continue to look for those sources of free money. Lots of students spend a lot of time junior and senior year in high school, find scholarships, try to get free money, get admitted, go off to school, and never think about looking for a scholarship again, a different one. So it's really important for us to make sure they know, keep looking for that free money, especially and even as they go off to college. Okay, so what are the steps? First, they determine the direct and indirect cost. Next, identify that gift aid, scholarships, and grants. Then they subtract gift aid from the costs, which will help them identify what we call the net cost. Then the idea is to compare the net cost of each school. Students want to be sure, again, that they are comparing apples to apples, the same cost for each of those schools. Not direct only for the school who listed only their direct costs, but yet another school included both direct and indirect. So of course, those are going to look higher because it's all the costs that are out there. If the indirect costs aren't on the aid offer from the school, the student may need to look at the school's website or contact them to find out their estimates for the indirect costs, again, if they're not included in the aid offer up front. A few more steps after we've calculated that net cost for each school. And again, basically keeping in mind when we talked about the net cost was determining all the costs, direct and indirect, identifying that gift aid, scholarships, and grants, and then subtracting. After that, when we have our net cost, we're going to subtract the federal direct student loans. Again, you want to include and compare both possible types. If on the aid offer, there's the subsidized and the unsubsidized. We're going to talk about those differences a little later, but then they're going to subtract that federal direct sub and unsub if they've been awarded both. And then if work or work study is offered, we encourage to really figure out what is it going to be costing the student. You want to subtract that as well. You want to subtract the work amount as well, because keeping in mind the student does not earn those dollars until they have actually worked. Okay. And I should say, I think this may be for the work funds. I want to say that they may not want to subtract, and I apologize for that confusion. They may not want to subtract those, and if they're being subtracted, add those back in, because again, that's not money that they receive up front to go toward their bill. The scholarships, those are applied to the bill. If they get federal grants, those are applied to the bill. If they get the direct loans, they do everything they need to be eligible for those direct loans. Those are subtracted. On the aid offer, if the school happens to be subtracting a work study amount, your student may want to add that back on, because it's not money they'll get up front in most cases. It's not money available to pay the bill. It's money that they earn as they work throughout the year. And then basically that helps them to pay for daily living expenses and things like that. Okay. And then also, as far as the Federal Parent Plus loan and any private loan, again, different aid offers are presented differently. If their aid offer has that Federal Parent Plus loan or has a private loan or amount that they could get through either of those two programs or some combination of those loans, those require an additional application and a credit check. Okay, it's not automatic that they're going to get that Federal Parent Plus loan because it's shown, or a private loan because it's shown on an aid offer. Okay, so they want to be sure that they're not subtracting that because again, they have to do more to get it. They may decide they need to get it, and that's the best course, but up front, it's not something that's automatically going to be subtracted from the student's bill, from those direct costs. So families need to understand kind of what bucket that goes into. Okay, financial aid offers. Here we have put together questions to help students collect information that is important to understand. First, but not only when comparing aid offers from different schools, but also even if the student knows which school they want to attend, this information is needed in order to understand what to expect and what is expected of them. So again, if I'm looking at multiple schools, I'm asking some different folks these questions. But even if I know what school I'm going to for sure, it's where I've always wanted to go, I still have to ask these questions because I have to understand how this is all going to be handled when I get to that school. Things like which aid is renewable and what is involved in retaining that eligibility. Or is this a one-year award? Is it just for my first year? Is the tuition frozen or is it guaranteed? Or will there be tuition increases each year? Will financial aid change if my enrollment statuses change? Part-time versus full-time? And if so, what does that look like? What happens if my enrollment changes? And then will financial aid change if I change my housing and meal options? And again, by how much? What does it look like? Again, whether it's one school or many schools, these are all questions that the student needs to understand to fully understand what they're going to be walking into on campus as far as their aid. We've got a couple more of these on our next slide. Is aid impacted, or more specifically, will it be reduced if the student receives an external scholarship? It's important to know, because again, we're talking about the idea of free money, go for it, apply for as much as you can, keep applying for it. As I get more of that, what will happen to the aid that is being offered? Again, earlier on, we talked about work study is not money subtracted from the bill up front, but that the student in most cases is paid when they actually work. But some other things they need to understand about work study beyond that is basically the steps or the process involved in getting the job. It's going to be different campus by campus. Will they be left on their own to find the job? Just simply look at a job, a job board that's online. How much help will the college provide in helping them find it? How many jobs are available? How many jobs are out there? Is there any type of a guarantee that I'm going to get a job if I'm offered, these funds? And also, while it's not on here, it does mention what is the pay rate, but think about the amount of the work study that's offered on the aid offer. What's the amount of that award? And can I work enough hours to even make that much throughout the year? So again, basically, the student needs to look at it and say, realistically, am I able to earn that amount? Is there going to be help? And will I be able to really work and get the funds that are showing on my aid offer and what's all involved from me as far as a commitment? That's a big one when we talk about work study. Here's a sample aid offer. We basically have just divided this up or cut it into two pieces on this slide and on the next slide. Okay, so this is kind of the first half of it that we talked about. First, it identifies the year that the aid offer is for, and it makes it very clear it's one academic only there in that first paragraph. This one was for the 24-25 academic year. The opening paragraph makes it clear this is for full-time enrollment for fall and spring semesters, but doesn't include summer. So the student knows if I'm in a plan, a program, I'm going to be going summer, they know that this is talking about fall and spring only. So they would need to find out, well, what happens when summer? That's a question they would need to ask. But this clearly tells them that period of time. Next is a list of the sources of aid. While it doesn't separate the categories or types of aid, each one is listed clearly identified as either gift aid, scholarships and grants, or loan self-help. So again, even though it may not be separated, it does say federal Pell Grant, does say supplemental grant, does say scholarship, and does say loan. So again, it's very clearly identified. And then it shows the totals. Okay. And I just want to mention too, by the way, while we didn't share it here, this school does have a guide which accompanies the aid offer that does talk about all of those categories. So again, we need to kind of make sure that even if it's not specifically on the aid offer, what other resources is the school providing? And guess what? We need to read and look at all of those other resources that colleges are, you know, providing. We end up being like our students sometimes and might not necessarily read everything. Alrighty, on this slide, it breaks down the cost of attendance, stating that it includes both direct charges and estimated indirect charges. And I know you can't read this, and again, we'll be posting this PowerPoint on the OASFA site like we always do. But so don't worry about, as Ed said, you know, writing everything down. But here in the two boxes, there's more detail to help folks understand both of those cost numbers that are provided. It helps you estimate the out-of-pocket costs. It even does two calculations. One, and this is great, one if the direct student loans were accepted, and a second higher out-of-pocket cost if the student does not accept the $5,500 in both the sub and the unsub loans combined. So they've really helped students go through that calculation we were just talking about. Also, in most cases, the student could accept the amount in the subsidized direct loan, but decline the unsubsidized if they chose to. And again, we'll be talking about the differences between those two and why would they do that. And then the message from financial aid at the very bottom talks about work, and then also the additional funding options. And again, they do have a guide that goes into more detail beyond what was on the actual aid offer. Here's a second example, also does a pretty good job. Again, you know, this one's even a little bit tougher for you guys to really read, and you'll be able to look at it more closely later. But real quickly, tuition costs are there, scholarship and grants identified as gift aid. It does the net tuition calculation, tuition minus gift aid, adds housing and meals to provide a total billable cost. At the bottom, it talks about options that there are to meet education costs. And this one goes one step further on the right-hand side, and it actually takes a look at a total 4-year investment. While the aid is only offered annually, you do the FAFSA annually, you get the aid offer annually, you accept the aid annually. So this isn't saying this is the aid that you receive, but what it's basically doing is it basically is showing them a complete view of their 4-year investment. Okay, so I think that's a great way to help those students prepare for 4 years, because if we start the first year, we definitely want to be sure we can get through years 2, 3, and 4, and we know those costs that we're being faced. So this one has some great supplemental information. Okay, this slide gives us more things for the student to consider. Again, we want to give them as many tools, as much information as they possibly can. Some of these I think we already mentioned, but does the institution have a tuition guarantee? Does it stay the same? Do most students complete the degree in 2 or 4 years as designed? So if it's a 2-year degree program, how many students completed in 2? If it's a 4-year program, how many are completing in 5? And another standard measure is how many actually completed in 6. So the numbers that are out there and that are looked at are completion in 5 and often completion in 6 for those 4-year programs. Some additional questions which help the student drill down on how much time it might take to graduate. Will the student need to enroll over the summer to graduate on time? Some programs require for them to be basically enrolled in summer as a regular part of the program. Maybe some of the health professions programs are like that. Are there sequential courses that could put the student behind if they don't test into the right level their first year? You know, are there classes they need to take to get them ready to get into some of those courses? So those are just a few of the other things. And then, of course, there on the right-hand side, just a reminder, and we talked about this a little earlier, those indirect costs are the ones that students have some control over. And again, you know, they can they can cook their meals at home, you know, they can get a roommate even they don't want to. I know that Ed used the term lifestyle choices. Again, the same types of things when it comes to making college less expensive and more affordable. And this is one area they can try to control some of those costs. And just a few more thoughts on what we wanted to share OASFA did with regards to making college more affordable. Maybe it's important to explore a 2+2 pathway as a way to reduce costs. A lot of folks are doing that. Encourage students to work part-time during the academic year and then full-time over breaks in summer. When they get to college, it's not like when they were in high school and they get there at, I'm not sure what time students get there these days, but they don't get there at 7 a.m. and they're there until 3 in most cases. They're not in school those many hours Monday through Friday. So the idea of working part-time, there's time to fit that. There's studies that even show that some students who work part-time do better because they're able to not have too much free time on their hands. There are resident advisor positions, which offer discounted or possibly free meals and housing. Again, apply for external scholarships and inquire with the college office about major specific scholarships. And then also consider jobs that offer tuition reimbursement, growing in popularity. That's one we're kind of throwing in. It's not on the slide because it's for you guys, but the idea of jobs that offer tuition reimbursement that's growing in popularity. If you have any of your recent graduates who may have started school or didn't start school and they come back, that's something for them to look at as well if they're in the workforce. What does an employer do as far as offering tuition reimbursement? Because we all know sometimes those students come back and ask you questions too. Okay, here's a QR code that can take you to the resource OASFA has put together. I haven't double checked that QR code and I apologize because we did have a new platform for the OASFA website. So if you have any difficulty with that, we'll make sure that we know you know where to find that. Ed's going to go through the resources at the end of our conversation today. So I just want to apologize. This was one thing I forgot to double check on just because the locations moved because the websites moved. So I'm assuming it probably doesn't work. But this shows you what that cost comparison worksheet looks like and would help your students compare the information they have from each of the schools. Okay, and with that, I'm going to turn it back to Ed.
All right. Thanks, Melanie.
Sure
So
thing.
great information about financial aid offers. I think sometimes folks don't pay as much attention to it as they should. So that was a fantastic overview. Thanks so much for that. We're going to pivot to making FAFSA corrections. So we all know FAFSA got an overhaul last year. And so something as I don't want to say simple, but something like making FAFSA corrections is also a different process. So in order to make FAFSA corrections, first, before you even do that, you're going to want to check the status of your FAFSA. So students will do this and contributors can do this as well. Log into studentaid.gov. So at that point, they'll click on the My Activity tab. And it's going to show one of these statuses. So draft is your section of the FAFSA form is incomplete. So again, depending on if you're logging in as a student or a contributor, it could show that. In progress, so you've provided your consent, approval, and signature to your section of the FAFSA, but the FAFSA hasn't been submitted. It's in review, so the FAFSA form was submitted but not yet processed. Action required. So this would be a case where they're missing consent and approval or a signature, or the FAFSA was processed, but a correction is required. Processed is your application was processed successfully and no further action is needed. And closed, your FAFSA form was never submitted and can no longer be submitted because the federal FAFSA deadline has passed. So again, those are the statuses that you could see as you log into your FAFSA. Now, I do want to point something out, and I know this is slightly off topic, but definitely related to what Melanie was just talking about with financial aid offers. And we get this question a lot. People will often misrepresent that process as everything's done. I should be getting my financial aid offer really at any point in time. Now, that could be the case depending on the time of the year, but folks need to also keep in mind that there is essentially a processing lag. So once it's been processed, It usually takes 3 to 5 business days for that information to be transmitted to the school, and then it starts with the school's process in terms of determining aid eligibility. So definitely something to keep in mind as you assist students on this, that just because it says processed in their FAFSA portal on studentaid.gov doesn't necessarily mean that the school has processed it and that financial aid offer is imminent. So back on track with making FAFSA corrections. So we always encourage folks to review their FAFSA submission summary. And this is only available under student login because, again, it's the student's FAFSA. And we just encourage folks to review it for mistakes. So they can make changes by logging into their studentaid.gov account. If they're a dependent student and they change information about the parent, one of the parents must sign, or really it's the parent from which the information was changed. They must sign the FAFSA form electronically using their own studentaid.gov account. So essentially, they are acknowledging the change or changes and saying, "Yep, this is accurate," and they're signing off on it. If they received a paper FAFSA submission summary by mail, they can make the changes, sign it, and send it to the address listed on the FAFSA submission summary. Candidly, folks, the faster and easier way is going to be through the studentaid.gov account, but we absolutely understand and appreciate that some folks still like to do things via paper. If that's the case, that's great. But just know that there could be some time delays and processing delays on that, just because it takes longer. All right, adding or deleting a school. This is usually the biggest quote unquote correction for the FAFSA. It's the one that most students, if they're going to make a correction, this is what it is. So first and foremost, the FAFSA must be processed. So again, log in and go to the account dashboard once it's been processed. Then select the submitted FAFSA form. So make sure you're clicking on the appropriate FAFSA and that it's been submitted. Select the processed FAFSA submission in that My Activity section, and then select Add or Remove Schools button. You'll search for the schools by either entering that school code, so that 6 or 8-digit school code, or city, state, and or school name, and then select search. And gang, I can tell you that it's really slick. I know used to you would need that school code. Now the city, state, and or school name, it works really, really well. So once that's done, select the school from the search results, and then the school's federal school code will appear in the form. And then you just click submit the update, and that's it. So pretty simple process. Just a reminder that no more than 20 schools may be listed on the FAFSA at one time. If it's a paper FAFSA, it only has space for 10 schools. We do always joke for some of us more senior in the industry that what's old is new again. So up until, well, my goodness. So sometime in the early aughts, early to mid aughts, you could have up to 20 schools. They rolled it back to 10. Now we're back up to 20 for the FAFSA on the web. So again, what's old is new again. If folks want to list more than 20 schools, they will have to remove schools in order to add additional schools. Actually got that question last night in a webinar, and I thought, oh my goodness, wow, more than 20 schools. All right. So anyhow, moving right along. What to do if the FAFSA is missing a contributor's signature. So going through these step by step. So if there's a missing contributor signature, the contributor will log into their account dashboard on studentaid.gov. They're going to select the FAFSA form that indicates action required under that My Activity section. They'll select Provide Signature, and then they'll sign and submit their section of the form. Now, if it's missing a contributor's consent and approval for that Future Act Director data exchange, they're going to log in and go to their account dashboard. Again, these are the same steps. Select the FAFSA form that indicates action required under that My Activities section. They're then going to select Approve and provide their consent and approval. They'll have to navigate through the form and then sign and submit their section of the form. So again, just following the prompts really is what it boils down to. One thing that does happen is sometimes folks will key in an incorrect Social Security number, or it'll go through the process with an incorrect Social Security number. So if you filed using an incorrect Social Security number, you're going to want to log in and update your information in your account settings. That's going to trigger verification, or not financial aid verification. It's going to trigger the Social Security Administration to verify your account status, which they will do, and update the information on your FAFSA form by selecting make a correction. So you're going to make a correction and update that Social Security number. Once the information on your FAFSA form has been updated, navigate through the rest of the form, and then you're going to sign and submit it yet again. Now, if you believe that the Social Security number is correct, you're going to follow the instructions to update the Social Security Administration and Federal Student Aid Information Center. So you'll want to contact the Social Security Administration by calling the number on the screen or visiting ssa.gov to either confirm your Social Security number or request that they update their records. Once that issue is resolved, you're going to want to contact the Federal Student Aid Information Center at the number on the screen. You're going to ask them to manually sync their data with the Social Security Administration. At that point, they'll be notified, they being the filer, they'll be notified by email once a match is confirmed. And then they're going to want to reach out to the school's financial aid office to inform them of the update. So it is a bit of a process, which is why, candidly, we always really hit very hard on ensuring that that Social Security number is accurate from the get-go. It makes life a whole lot easier for everyone involved. Incorrect Social Security numbers, they can be challenging to update. Which is really outlined here. I mean, we make it look very easy, and I think it is easier than what it has been, but it's still a lot of steps and dealing with various federal agencies. All right, and at that, I'm going to turn it back over to Melanie, and she's going to cover key terms and loan information.
Okay, great. Thanks, Ed. Before we jump into the specifics, or just kind of a couple of comments that I wanted to make. First of all, if you have sat in on this program in the past, we have expanded the loan section this year, and that was kind of based on feedback that, folks wanted us to, and that may be in part because student loans have been in the news. We've all been hearing about them for several years now, and one way or another with different pieces of information, different sources, different parts of the loan program. So I think that's why folks are wanting to be sure that they have more information. And we want to be sure that you have the information that you need to be more effective and to feel more comfortable when you're talking to your families about it. That's really a big part of what today is for, is to help you feel more comfortable when you're having those conversations with the student and families, and then they're going to feel more comfortable. So it's a win-win situation. The other thing I want to be sure to say is that this is information as we know it today at 10:11 a.m. on February the 19th. I say that jokingly, but we all know that things in federal government are changing. There has been some discussion, not just about the Department of Education, but with regards to some of the federal loan programs specifically, and some changes that may happen. And so again, I just want to say that, OASTRA will keep you up to date when things start changing, if they start changing. Schools are thinking about and preparing for possible changes. But again, this is all information as we know it today, and we want to be sure that you have that right information in your hands. So that's kind of our disclaimer to the truth as we know it today. Alrighty, taking a look at the loan information. Again, we've got one more reminder on the next slide where we want to be sure that you're keeping in mind that you always maximize gift aid, scholarships and grants before pursuing and committing to student loans. Even the best student loans that are out there, the student loans that students borrow, free money is still better. That's the best thing that there is. So again, it's money that doesn't have to be repaid. And I think we all would like to have free money versus having to repay it. The next slide just really gets into some general key terms and loans, or terms regarding loans. Students, they haven't borrowed, maybe parents need some education when it comes to borrowing. But here we just wanted to provide several terms that are important to understand when considering borrowing and how much you should be borrowing. Talks about interest rate, the rate charged to borrow money, and of course, the higher the interest rate, the higher the total cost. Interest capitalization, that occurs when unpaid interest is added to the principal amount of a loan, which basically increases the principal amount. And of course, the less frequently that it capitalizes and becomes part of the principal balance, that of course is better as it decreases the total cost. We talk about repayment incentives, which again, if these are offered, they could easily result in a lower cost of borrowing. We'll talk about them briefly on one of the other slides, but this just really gives you an example of some of those repayment incentives that are out there. There could be an interest rate reduction, could be credits to the loan balance by meeting some kind of a criteria. For instance, making so many payments, or maybe by, you get a credit when you graduate. Or maybe if you have it's a bank that actually has banking facilities and branches. Maybe if you have a savings account, you get a discount. So again, or some type of a repayment incentive. So we want to look for them. We want to understand the benefits, but we also want to be sure that we understand the eligibility requirements because there will be, I would guess, most likely eligibility requirements in most cases. Okay, we're going to jump into the loan programs. Earlier, we briefly mentioned when we talked about the aid offer that aid offer could include both direct subsidized and direct unsubsidized loans. Federal direct subsidized and unsubsidized loans are quote unquote low interest loans for students enrolled in college at least half time. Okay, with the direct subsidized, this is available to eligible undergraduate students who technically demonstrate financial need. And keeping in mind that if you ask a student or a parent, we need money. So again, when we say need-based, the direct subsidized loan, they must demonstrate financial need. And basically they demonstrate financial need based on a federal formula and the federal guidelines. And so if they're eligible for that direct subsidized loan, that student has demonstrated need based on the government's guidelines. That student is not responsible, that student borrower is not responsible for the interest on that loan during certain key periods of time. While the student is in school at least half time, during their what we call a 6-month grace period, which is a waiting period before they go into repayment, and then during eligible deferment periods. Basically, they demonstrate need based on a federal guidelines, and technically then they're not responsible for the interest. It's covered by the federal government. So that's the good thing about being eligible for subsidized direct loans is basically it's interest-free as long as they're in school during grace period and during deferment. So it's going to cost them less. The unsub is borrowed when technically no need is demonstrated, and that's the major difference. But it's a big difference, and it impacts the students in impacting their total cost of borrowing. While it's still true that no payments are required during those key periods of time while the student is in school at least half time, during that 6-month grace period or the waiting period after they graduate, leave school, drop below half time, that grace period, and then again during any of those eligible deferment periods, such as if a student goes back to graduate school. Okay, so during those 3 key periods of time with an unsubsidized direct loan, the student's responsible for the interest even then. There's no period of time when the student is not responsible. They may not be paying it at that time, but they are responsible for interest on an unsubsidized direct loan always, where the subsidized loans have that interest subsidy during those key periods of time. Now, student borrowers are not required to be making payments on their direct loans while they're in school or during their grace period or during a deferment. But keep in mind, especially as we start out during that in-school period, that they can make a voluntary payment. They can make a voluntary payment of whatever the interest is that's being charged. If they wanted to, they can make a voluntary interest and principal payment. But if they could do that, they probably would not necessarily be needing to borrow. But we really do encourage them to at least try to make, and this is one way parents can help out, is by making interest payments on that amount they're being charged. That way it's not accruing while they're in school, because they eventually pay all their interest at all times on unsubsidized. All right, the next slide, we get into some of the basic terms and conditions. Several things that we did want to point out is, first of all, let's make sure this is on here. Yep. First of all, and this is in the second column in that first chart that you see, first table that you see on the left-hand side. First of all federal loans have an origination fee, which is subtracted from the funds being sent to the school. And in this case, it's for the student borrower, because we're talking about those direct subsidized and unsubsidized loans. With direct student loans, currently that fee you'll see there is 1.057, which means that $58.14 will come off the top of the loan based on the amount the student can borrow, which you see there on the right-hand side. Okay. Again, this is money comes off the top. It's not received by the school. With the student, fortunately, it's just a small fee, relatively speaking, 1.05%, but they still repay that fee as part of the total that they owe. And if the student absolutely needed $1,000 to go toward their outstanding fees, again, we encourage never borrowing more than you absolutely need. If they need $1,000, they have to ask for that little bit more to be sure that they cover that 1.057 that gets subtracted from the funds that are sent to the school. Okay. Next, we're going to talk about the interest rate. This shows the current fixed interest rate of 6.53%. Both the fee and the interest rate have the applicable dates. They're a little bit different. You can see those on the chart, but with the interest rate, the fixed interest rate, and again, the federal loans all have fixed interest rates, fixed interest rate of 6.53%, and that's for loans disbursed from 7/1 of 2024 through 6/30 of 2025. So basically for the 24-25 academic year. So that loan will have a fixed interest rate of 6.53% the day it was disbursed, and 10 years from now when they're paying that loan off, it will have a fixed rate of 6.53%. And actually, that's probably the highest rate that we've seen in at least a decade. For the prior year in 23-24, the undergraduate students who borrowed a direct sub or unsubsidized direct loan, they were at 5.5%. So we saw it go up nearly a full percentage point. The rate, even though it's fixed for the life of the loan, is how we term that, it stays the same. Rates in general, however, for the direct loan programs, they're set or they're reset each year. It's an effective date beginning on July 1st. You see that on the chart, but it's July 1st through the end of June of the following year. So the next change that we'll see as far as setting new rates will be effective for July 1st of 2025, and it will be in place until June 30th of 2026, the next 25-26 academic year. Delving really deep into how these rates, just so you kind of know what's expected and how we don't know for sure what's going to happen. But the rate is based in part on a 10-year treasury bill. And basically, currently for 24-25 academic year, the treasury bill rate that the 6.53 is based on is 4.83%. looking at recent trends in a 10-year Treasury bill rate, and we actually put the URL up there for you so you could do your own research if you'd like to. But last week on February 10th, the 10-year Treasury bill rate was 4.51%. That's higher than the rate, the 4.83 rate that was in place when the government set the 6.53 fixed for undergraduate students. So if February 10th were actually July 1st, and they were resetting federal direct student loan rates for next year, the rate would actually be higher in 25-26 than the highest rate we've seen in over a decade for 24-25. Now, that's as of February 10th. If you looked at it for the last couple of 3 months, I've seen it as high as 4.79%. I've seen it as low as 4.39. So again, something we need to watch, but keep in mind, student direct loans have a fixed rate adjusted each year on July 1st through June 30th of the following year. Really depends upon what's happening with the feds. Are they going to lower rates? Are they not going to lower rates? Which we know impacts the rates for Treasury bills. So probably a lot of information. We just wanted to be sure that you understood that those could go down some, or they could also still be going up some. So, and I'm sure that your students and parents are wondering what's going to happen. How much is it going to cost me? Okay, and then the right-hand side, the other chart, sorry about that, has the borrowing limits. And you can see there that it shows max amount of $5,500 for the subsidized and the unsubsidized combined, but also a limit on the amount of need-based subsidized loans the dependent student can borrow each year. And again, this is for the dependent students, because typically most high school students are dependent. Keep in mind that first-year students can borrow no more than $3,500 in the need-based subsidized direct loan. And that $3,500 is the max, even if the student's need that they demonstrated was greater than $3,500. Say a school costs $1 million a year, the student has no other financial aid. Bottom line, the maximum subsidized direct loan that would basically be interest-free for them with that interest subsidy is still going to be $3,500 their first year. They can get the additional $2,000 through the unsubsidized. And then if they demonstrate no need, the total $5,500 is unsubsidized. So that's a combination. Those maximum borrowing limits are a combination of the two programs, and how much falls into each is based on their need, as well as, their grade level. And again, the maximums no more than the 35, 45, and 5,500. Okay. All right. Continuing on with key terms and loan information. We have another slide that gives us an overview of the loan application process. But we wanted to provide just a little bit of information here with regards to some more information, because it is actually, the federal loans are the most utilized type of federal aid that's out there. So if a parent or a student says, well, I want financial aid, I don't want the federal loan. The federal loan is financial aid. And again, it's the most used or utilized that's out there. If someone says they can guarantee the student would receive financial aid, if someone's guaranteeing federal financial aid, they're guaranteeing a direct unsubsidized loan, because any student, regardless of financial need, can get that direct unsubsidized loan. But again, in order to get the subsidized, they have to demonstrate need. This just shows you some of the things I already mentioned, the FAFSA, those key periods of time. It also talks about flexible repayment options with terms of up to 10 to 25 years. There are various deferments, back in school, military deferments, very special things for the military. And then there are some loan forgiveness options and income-based repayment, but those are the ones that we really don't know for sure what's going to happen to them. So we're just going to say that they're out there right now with more to come later. Okay, taking a look at the next slide. When all financial aid, including the student's direct loan, does not cover the cost of attendance, they have that gap. You'll hear people talk about gap financing and how do I cover the gap? This slide talks about two of the options available to the student and the family to help fund those costs remaining after other financial aid, including the student's direct loan. Okay, and one of those is the federal parent loan for undergraduate students known as the PLUS loan. With the PLUS loan, the parent, biological, adoptive, potentially a step parent is the borrower. They will always be the borrower. It can never be in the student's name, never have account or repayment information sent to the student's attention. With a PLUS loan, the parent starts out as the borrower and the parent remains the borrower. With many of the private loans that you see there on the right-hand side, with many of the private loans, the student is the borrower and a parent could be the cosigner. There are, however, and we don't specifically say this on the slide, but there are some private loan lenders who will offer a loan where the parent is the borrower and the student is not a responsible party, not on the loan at all. So it basically is if a parent wanted to take on the responsibility of borrowing these funds beyond what the student borrowed in their direct loans, there are some lenders who offer that. But in most cases, with most private loans that are borrowed, the student is the borrower and the parent is a co-signer on that loan. Both of these loans are credit-based. The criteria, though, are very different. So when we talk about both of them having some type of a credit review, keep in mind that it's important for the family to understand that it's very different between a federal Parent Plus loan and the direct loans that come from banks, credit unions, state agencies, financial services companies. First, for the federal Parent Plus loan, it's not, and I want to be sure I say it is not the same as a kind of credit check you go through for a car loan or a mortgage. You know, what we're used to seeing. For example, the credit criteria for a federal Parent Plus loan does not include any type of consideration of the parent borrower's ability to repay that loan. Again, it does not look at the ability for the parent borrower to repay the loan. And keep in mind, when we talk about how much can be borrowed through the Plus loan and through these private loans, it can really be, as it says in the line there above the two boxes, the maximum loan amount is the cost of attendance determined by the school minus any other financial aid received. So they could be borrowing $20,000 a year and no one is looking at the ability of the parent to repay. For this credit check or this look for adverse credit, that's basically how the federal government defines it. They're looking at the parent's credit history to see if there's any adverse credit that's out there. They're looking for specific kinds of credit problems. To summarize it as quickly as possible, basically, they're looking at if there are recent accounts that total $2,085 or more that are 90 days delinquent or more than 90 days, charged off or placed in collections, then the parent is considered to have adverse credit. But again, it's greater than 90 days and it has to total more than $2,085. Or within the last 5 years, there's been a bankruptcy, a discharge, a tax lien, a wage garnishment, a foreclosure. Those are the two criteria that serious delinquencies, 90 days or more, and then those bankruptcies, tax liens, those are what are considered adverse credit and would prevent the parent from being eligible on their loan for a Parent Plus loan. Keep in mind that it tells us here that a parent with an adverse credit history may obtain an endorser or meet some, an endorser really is like a cosigner. It's someone who says they don't have adverse credit and they agree to pay back the parent's direct plus loan if the parent doesn't. So it's basically someone with no adverse credit saying, I agree to pay this if the parent doesn't. You can also see here that if the parent is unable to get a plus loan, their student may be able to get additional unsubsidized loan funds. Normally, a dependent student can't get as much unsubsidized funding as an independent student can. But when a parent is denied for a Parent Plus loan, the school may offer the child, the student, their child, the higher maximum amount of unsubsidized loans that otherwise is only available to independent students. So bottom line, there are some options even if the parent doesn't make it through that adverse credit check. Taking a closer look at the private loans, again, I mentioned students a primary borrower. third-party cosigners cannot be required, but they're strongly is encouraged, as it might help the student's chance of approval and may help the student get a better rate. A big thing here is the cosigner does not need to be the parent, which is different from the PLUS loan where it was the biological, adoptive, and potentially a step parent. With cosigners, it's any third party who's willing to repay the loan if the student borrower does not and meets the lender's credit criteria and shows that they can repay it. So again, many cases it is the parent who is the cosigner on a private loan, but not always, and it's not required. Credit check, it's like any of those that you're used to. It is like your car loans. It is like your mortgage. So that really does look at the credit worthiness, the ability to repay. But the criteria can differ by lender. Some can look at some pieces of information. Others will look at other pieces of information. Some are FICO driven. So even though they have to be credit worthy, students really want to do their research because that criteria can be different from lender to lender. And then also most private lenders will offer what we call a cosigner release. And that basically means that the student borrower, once they meet qualifications or certain conditions that are set by the lender, once they meet those conditions, say it's make a certain number of payments, and of course prove I can pay the loan on my own, the student borrower can apply to have their cosigner released. And then that way the loan becomes in the student's name only. As long as they qualify and meet those conditions, and like I said, typically one of those is prove they can pay it on their own, then that cosigner can be released. But again, those vary by lender, and you students want to be doing their research. Okay, some more information on these two gap financing options that are available to help pay what's left, a couple of pieces of the puzzle that they can fit together. And again, keeping in mind, maximum amount is the cost of attendance determined by the school minus any other financial aid. Take a look at the interest rate. In this case, you'll see that when we talk about the Federal Parent Plus loan, you'll notice that, and this is all set by legislation, regulations, Parent Plus loans will have higher interest rates, the way they're set up today, and also will have a higher fee with the way things are set up today. Again, it's based on the Treasury bill. We talked about that. We don't know for sure what T-bills are going to look like at the end of May. So we could be looking at higher, we could be looking at lower. The current rate for a Parent Plus loan, and again, based on a Treasury bill rate of 4.483%. But you can see here with the way the government has it set up that a Parent Plus loan is at 9.08%. And that's for loans dispersed between 7/1 of 24 and 6/30 of 2025. Again, we'll know at the end of May what July 1st is going to look like. Just to give you an idea, since I mentioned that rate on February 10th, again, the T-bill was a little bit higher. If we were adjusting the rates today, if we were, could time travel and it was really July 1st, 9.11 based on the Treasury bill rate that was on February 10th is what that parent loan would go up to. But again, we've seen lower, we've seen higher. So again, we're just going to kind of have to wait and see what happens. A parent loan is automatically placed in repayment of both principal and interest payments, but the parent borrower can request to defer those plus loan payments, but they have to ask for that. Automatically placed in principal and interest repayment. Interest is charged on a Parent Plus loan during all periods. In school, grace, deferred, there is no grace because it goes automatically. But if the student's in school, the student's in deferment, parents are always responsible for that interest on a Parent Plus loan. Here we look at the origination fees for a Federal Parent Plus loan. Again, based on government legislation that's out there, the fee on a Parent Plus loan is 4.228% for loans dispersed between 10/1 and then 10/1 of 2020 and 9/30 of 25. So again, right now we're looking at 4.228%. We will have a slide later that gives you an example of what that looks like as far as dollars, actual money. The other side kind of shows you what's out there as far as the private education loans. Typically, they do not have an origination fee. Terms and conditions, I think I've said it before, vary from lender to lender, important to shop around. Where the federal loans were fixed, these offer both variable and fixed rate. This shows you a variety of in-school repayment options that are available. Again, interest is charged. They're responsible for it, just like with the PLUS during all periods of time. And then repayment can vary from 5 to 20 years. Okay, the next slide really, we're not going to spend much time on it because it talks about the how do I apply. The most important thing, in schools will guide the students through this. The important thing to remember, direct sub and unsubsidized loan, even though they're presented in an aid offer differently than the Parent Plus and the private education, the FAFSA is the loan application. There is a promissory note that they have to complete, and there's entrance counseling that's required. So even though it's a little bit easier process because the FAFSA is the loan application and students can put that loan in an aid offer that, show what the student is eligible for based on the FAFSA data, there's still a master promissory note and there's still entrance counseling, and all of that is at studentaid.gov. Under the Federal Parent Plus loan, students do need to complete the FAFSA in order for the parent to be eligible to apply. Not to be eligible for the loan, but be eligible to apply for a Federal Parent Plus loan. And then again, there is a Plus loan promissory note that they'll have to complete. And in some cases, there is Federal Plus loan counseling they'll need to do. And again, all of that is done at studentaid.gov. And then on private education loans, the schools may require the FAFSA to be completed. Lenders don't require it for the private loans that they offer, but we do encourage folks to complete the FAFSA because that's how they find out about a lot of that free money. We never want folks to assume that they're not going to be eligible for any of the free money that's out there as far as the federal aid. And that's oftentimes why schools will require a FAFSA to be filed. They may make an exception if you talk to them, if your parent absolutely doesn't want to complete the FAFSA, but it's a really good idea, at least the first year, to see that, okay, yeah, you're right, I'm not going to be receiving any of that. But we always say, do the FAFSA, do the FAFSA. Most colleges and universities, their websites will have a list of lenders that they either recommend or their students have historically chosen to borrow private loans through. And then again, shopping around, as long as you do it within relatively short period of time, the FICO score, it doesn't hurt your credit because you're shopping and they recognize that. If you're doing it a year apart, then you're going to have 2 separate hits to your credit, but there's nothing wrong with shopping around within a short period of time, couple of weeks, to see which one's the best, and we encourage everybody to do that. Okay. We talked about repayment incentives. Again, we mentioned that earlier. This just gives folks an example of what might be out there, both for the direct sub and unsub that the student, the Federal Parent Plus loan that the parent borrows, and then also private education loans. The one kind of standard one across the board is that 0.25% interest rate reduction for signing up for some type of automated payments, as opposed to having to go out and pay it each month, because we really want to get folks making those payments on time and making their payments. So across the board, that's one of them, but this just talks about some of the others. Students want to be sure to do all their research. This next slide, we mentioned the idea of the fees that are out there and how big of an impact. I mentioned the $58.14 for the direct subsidized, unsubsidized loans. You can see here that with a requested loan amount of $5,500, with that origination fee of $58.14, the student gets almost the full amount to use toward the balance they have with the school to use toward their direct charges, but it's a little bit less. It's $5,441.86. Keep in mind too that typically that's divided in 2 because you have a fall semester and a spring semester. Okay, so again, the aid is for the academic year, fall and spring, and it's divided. Also want to mention that some schools will put the net amount of the $5,442 or $5,441. Some schools will have the gross amount of the $5,500. So your students need to know that even though an aid offer says $5,500, it's a little bit less because again, we say never borrow more than what you absolutely need. So if I needed $5,500, they need to know they're not going to receive $5,500. They have to come up with $58. So again, the students direct sub and unsub, 58's not that tough to do. When we turn to the Federal Plus loan, again, just by federal law, regulations that's out there, the origination fee is higher on a $10,000 loan. That 4.228% origination fee becomes $422.80. Because federal plus loans, you can borrow up to the cost of education each year as determined by the school. If the parent needed 10,000 to go toward the student's costs, that 422.80 gets subtracted for a balance of a little over 9,500. Because they can borrow up to the cost of attendance, they could borrow more than the 10. There's not that set annual limit like there was with the students direct subsidized and unsubsidized. So if they absolutely needed 10,000, they would ask for a little bit more so that when the fees are subtracted, which on 10,000 is the 422, but if they ask for more, they subtract the fees, then the net received at the school could be that 10,000. So they kind of have to figure out how much more do I need to borrow? If I really need 10,000, I have to borrow more than 10,000. And hopefully that makes sense. Most private education loans don't have an origination fee. So they ask for 10,000, they borrow the 10,000 should they demonstrate the eligibility. And again, that also, all of those are divided into 2 terms, fall and spring. It'd be 5,000 and 5,000 each of the terms. Okay. As far as one other option I wanted to share when it comes to filling the financial gap, it's a type of, it's not, quote unquote, a loan, but it's a great option that is out there. Schools themselves will offer tuition payment plans to help cover any remaining balance. These plans allow the family to spread the payment out over time. It's typically over a semester, or maybe it's over the entire academic year. They may have fees or interest charges that could vary by the school. Typically, I've seen fees as opposed to interest charges, but again, you want to talk to the school. And for parents, help them remember that, keep in mind that they have costs today that their student incurs, whether it's, sports or whether it's extracurricular activity, but all of those day-to-day expenses, they're not going to have or may not have, especially if the student's living on campus. They won't have all of those expenses once the student's in school, in college. So they could stop and think about a tuition payment plan, which basically spreads it out, gives them an amount that they would be paying each month for a certain period of time. And they can use some of those funds they're spending one way today while they're students in high school and maybe put it toward a tuition payment plan. And then that way they can basically help cover some of that remaining balance. And the cool thing is they kind of piece it together like a puzzle. It doesn't have to all be in a tuition payment plan. Some of it can be in a tuition payment plan that they can afford to pay each month. And then they could borrow through a federal plus loan or a private loan for the difference that they can't afford through a payment plan. So they want to talk to the school about that. They want to be sure the school's aware that's what they're trying to do. And that way the school, the university, the college can help them through that process and help them figure out what this will cost them versus what this will cost them, and kind of help them piece together that individual puzzle. But it really is just making sure your families are aware of all of the options they have available to them, and then fitting it all together in the way that's right for them. Okay. And now I am going to turn it back over to Ed, and he's going to finish up with some of those resources. Thanks, Ed.
All right. Thanks so much, everybody. We are going to finish up here very quickly with some resources. So I'm sure most of you are aware, but if not, OASFA does have a college access and school counselor contact database. So I acknowledge that we're over time here. So again, not going to run through these, but just know that if you go to that URL, it will allow you to get on that database, and we will send you information on workshops, events, and training announcements. So keep that in mind. Again, this is what it looks like when you go to that URL, and it has a kind of like the bat phone to the outreach committee as well to be able to contact us directly if you need anything in terms of like a financial aid presenter or things of that nature. Some of the other resources out there are our FAFSA priority deadline. So we do refresh this regularly and annually. So we make sure that this is out there, giving you a better idea as to when those priority deadlines are for schools, so that your students make sure that they are getting their FAFSA in a timely manner. And there are other resources out there as well. So some of these are resources that are OASFA exclusive, if you will. Some of these are just aggregated from other areas, like the FAFSA completion tool by high school, FAFSA Ohio student record data. I do want to give this a shout out. If you don't have access to this, we do encourage you to contact your superintendent or district official as to how you can get access to this, because it does allow you to view individual student FAFSA completions at your school if you have access to it. So a really good tool as you work with students to ensure that those that you've been working with truly have completed the FAFSA. And then some of the governor education highlights, again, due to time constraints, I'm not going to read through these. Just know that we continue to push forward with increases in OCOG, which is the Ohio College Opportunity Grant, as well as they have kind of widened that scope with the transition from EFC to SAI. All right. And at that, gang, again, I acknowledge we're over time. I do want to thank my co-presenter, Melanie. Actually, I'm probably her co-presenter. I want to also thank Emily and Veronica, who were handling the Q&A behind the scenes. And as always, a special thanks to the rest of the OASFA Outreach Committee who helped us put this slide deck together. Special thanks to Morley Keller with the National College Attainment Network, who really does a fantastic job of keeping us up to date what's going on nationally. So with that, again, thank you so much for our participation today. The recording will be out on the website. Thank you again, and have a great rest of your day. This concludes our webinar. Thanks so much.